Hello traders, Gary Wagner here, about 10:45 in Honolulu, 4:45 in New York. It is Tuesday, April 29th, 2014, and this is the daily report for gold and silver. In essence, unchanged activity in terms of the price change in gold today, trading at $12.95, $12.96. As I said, it puts it off $1 to about up $1. Now, the low has been $85.80, so well off of the low. The high, $13.0240, so it has made a stab at the $1,300 mark, but could not follow through. Now, we do have platinum higher and palladium higher. Silver, however, is trading off about 12 cents on the day, 19.24 on the low, 19.66 on the high, and current 19.55. More on silver towards the end of the show. So traders, the big question to me is, have we ended this most recent round of technical selling? Because that's what I believe this recent down activity to be after the market hits, I believe, an intraday high somewhere around 1305. Looking at a very, very short-term chart, 320 minutes, standard candlestick format. Let's go ahead and kind of scale this in so I can show you what I'm currently looking at and what my sense is for the market. And it's as follows. We saw this market take a dip. We spoke about the fact yesterday as this market was coming down that we'd really like to see it hold this particular retracement level. I believe 1287. In fact, we'll go ahead and shrink the chart down a little bit so we can see where it comes from. Yes, 1287. We talked about that yesterday, that being a pretty important point and really strategically a point we would like to see it find some sort of support. Now, I draw your attention to the most recent lows that we've had, and they're right in that area. In other words, we've popped back up. We're in essence unchanged on the day. We're $5 off the low, and the lows are roughly in this area. So my sense right now is that we are seeing a realistic amount of support come into the market right in this particular area. Call it 1285 to 1287. There is a reluctance to sell in this area, and simply put, it has a lot to do with the uncertainty, the geopolitical uncertainty that's currently going on in Russia. Of course, we started the FOMC meeting today, but according to many news sources, most are not expecting any kind of, I quote, fireworks, and the reason being is the shakeup that we saw in the market after we concluded or released the minutes last month, and I'm speaking about the equities markets, is not something that many reporters and analysts, including myself, really feel they want to repeat. So I would look for that to be not so much a non-event, but just more a stay-the-course event. Now, we have other economic numbers coming out. Sanctions have been implemented to Russia, and we'll have to really see how that unfolds. But my sense is that we haven't heard the last of what's going on in the Ukraine. So we're looking at a daily chart. This is spot market Forex gold, what we call the cash market of gold. And we have simply put in one basic retracement. This retracement covers the entire span of the rally that we had starting at the beginning of the year, culminating middle of March. And from there, we can see the corrective action did not take out this 61% retracement. That to me is extremely bullish. We also talked about the fact that what I believed we were looking at was some sort of an A here, a B, and then a culminating C ending this corrective wave. This would be wave 2 here, and this would be our wave 1. If that's the case, we are now going to enter into wave 3, and that's what we're trying to see if that's how the market unfolds. Obviously, that's why we recommended going long this market. Now, when we look at the straight candlesticks themselves today, again, we have this doji. This is in essence, unchanged. You can see, simply put, the open and close are, as of now, identical because the current equals where the market opened today. What is interesting to me is that as this market came down, we identified a 3-day pattern, 3 river, Morning star, that's right here. We actually got a confirming candle, that's right here, but that did not give us any follow through because the basic highs that we had just previous, and this is, as I said, we're roughly around 1305, were not taken out. Market came under pressure, but as you can see, it hit this low here. We talked about 87, 85, that one particular retracement level. And that retracement level is really, it is off of this particular retracement. It's just, I believe it's the 38% retracement level. We'll go ahead and add that so we can see. No, excuse me, it would be the 50% retracement. And as you can see, I've simply added that into this fib retracement. Begins down here 1183 up to 1391, 50%, 1287. We can see that this low has come to, tested it, and bounced, at least for the time being, has bounced $10 off that. So we're getting our doji here. Doji again represents a changing of the guard, so to speak. It's a point in which neither the bulls nor the bears have absolute control of the market. On a green candle, the bulls were dominant through trading activity during that period. They also were able to sustain not only a rally, but close above the open of the market. The reciprocal, or excuse me, the opposite is true for the red candles. It opens near the high, closes near the lows here, and it's a red candle, meaning that it is closed below the opening point. You get this doji. Now, when we look at the same chart, but through the eyes of a Japanese average chart, you're going to find it to be quite interesting. Let's go ahead and pull that up. And when we do, as you can see, this down day that we saw, this move back from 1305 back down on a Japanese average, has also caused this candle to form, which is a doji candle in the Japanese average, meaning when you compare the midpoint, it's a small red candle, so it looks like it traded and closed just below the midpoint of the prior day candle, but it is a doji, and the doji could either be signaling a turn of events, meaning the market has moved up, we get this doji, it could move back down, or it could be simply what I call a resting area in which you get price consolidation. We've had an upward direction. You get consolidation, sideways action, forms those dojis because it opens and closes the same place, preceding another price spike to the upside. Now, obviously, my sentiment right now is that we'll probably witness something like this as opposed to a market move down. Although anything is likely in the market, my sense right now is that the market is simply consolidating, resting before moving higher. Now, I draw your attention to this chart we've just put up. It's a weekly chart, and in this weekly chart, I have a multitude of different fib retracements. In essence, the way that I created this chart was we have different starting points that will then go to the top, but they're all starting after the market has rallied, and then we get our correction, rally here, then to the correction, rally here. So we have another one that starts from here. We have another one that starts from here, and so forth. And so when you get those, you get series of different fib retracements. Now, what I look for when we create a chart like this, simply put, is fib harmonics. So we're looking for two different time cycles and price cycles, because we're starting here at a different time than here. We're also starting at a different price. We're concluding at this record top to get these different levels. And as I said, we look for, in essence, harmonics. And we do have our harmonics right here. 1295.57. Let's draw this here, and you can see that it is a 50% retracement and a 61% retracement. Traders, this is what I mean by harmonics, where you get a very, very close price point with different ratios, or different time sequences, I should say. This being 95, this being 92, so right in that area. And that's currently where we're trading right here. So this is a pretty important area. We would look to see if we can find support. The next real genuine level of support below that dips in well below 1200, and we have to actually even isolate it more, because the next point below this would be 1229. I'm really not looking for the market to go to that point, but as I say, this is a very useful chart for major resistance and support levels based upon fib harmonics, meaning I'm looking for this doubling. You can find it here, for example, and it's a fairly uncommon occurrence, I should say. You've got this one, these are those record lows. You get a triple harmonics here, 1, 2, 3. So it doesn't occur all that often, but I believe when it does occur, when we see the market kind of grouped together with this type of harmonics as we're getting right in this area, to me, that's a significant mathematical number. It's something that we need to pay attention to. Now, traders, as much as I like the potential bottom action in gold, and I think that there is a significant opportunity to see this market rise over the next 2 to 3, 4 weeks, so to speak, I cannot say the same for silver. Silver is back trading under 1958. That's a pretty critical number for us. That's a number that we've been looking at. And it's now starting to trade towards the lower end of the range. This market has absolutely been range bound. We can see different levels of support. We've got some major support here just at around 1900. We have some resistance that comes in here at around $20 per ounce, and then real major resistance that comes in at about 2025 to 2040. But right now we've been stuck in this range between $19 and $21. I see no reason for it to break out right now on a technical basis. We haven't seen any evidence that that is going to be the case. Maintain your long positions in gold. Remain sidelined in silver for shorter term investment purposes. Longer term accumulation is a completely different story, because I think that you're safe to accumulate in this area. I don't believe that we're going to see silver go to $14 or $15, and I believe at some point it will make a play. I just don't see that happening right now. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.